Pixar, animation studios for films and related products, is set to report earnings later this week. The company's up about 60% in the past 12 months, and their Finding Nemo has been one of the top hits of the year. How will this relate to their earnings and their future partnerships? We will ask Leigh Crawford. He is the co-portfolio manager of TCW Galileo Select Equities Fund. His fund is up about 35% in the past 12 months and has Pixar among its holdings. He joins us from our bureau in Los Angeles, California. Thanks for being on the program.
Hi, thanks for having me.
Before we ask you about Pixar, I wanted to ask you about the markets in general, which have been basically flat this summer. If you count June as the beginning of the summer, June, July, and now in the beginning of August, they've really gone a whole lot of nowhere. Will they stay that way?
Well, I would say that we are, cautiously optimistic that the recent good performance will continue. We realize that a lot of stocks have gone up a lot quickly, and in particular, a lot of our holdings have performed very well in the last 12 months. Our internal research efforts are kind of less focused on trying to catch the next earnings surprise and more focused on identifying the highest quality businesses that we can find and investing in them for the long haul.
Are there particular sectors you like, or is that comment you just made about identifying the highest quality performing stocks means that you're really not, you're sector agnostic, you're just looking for your stock names individually?
Yeah, what we look for is companies with unique and sustainable competitive advantages, with proven management teams, and with best-of-breed financial performance. So we don't do sector calls or macro calls or thematic investing. Now, with that said, we do have a significant amount of our portfolio in the healthcare area, in the technology area, in the financial services area.
Mm-hmm. All right, now let me ask you about Pixar. We'll be getting, as we said, earnings from Pixar next week, and your firm, as we said, the largest holder of the stock next to Steve Jobs. Pixar earnings fell 50% last quarter. They had been 30 cents, and they fell to 15 cents last quarter, year over year. Do you like the stock now as kind of a Finding Nemo play?
I'm not sure that I would put it that way, that we like it just because of Finding Nemo, but I think it's important to recognize that their results historically have been lumpy because their quarterly performance has a lot to do with the timing of the release of their movies and then how that release impacts other revenue windows like DVD and video rental and sales and merchandising, etc. So I think the right way to look at and evaluate the performance of the company is on more of kind of a rolling average basis. So I would sort of look at 24 months rolling average as a more clear picture of what they've accomplished. They've had 5 films so far for a total of about $2 billion in box office and about $1 billion in profit. Their gross margins on average are over 80%, and their bottom line, free cash flow margins on average are over 40%. So we view their fundamental performance as excellent and superior to most everything else in the entire entertainment and media industry. For sure, Finding Nemo is on a trajectory to be a bigger box office success than Lion King, and it's likely that the fundamental performance you see in the near term, meaning sort of within the next 12 months, is likely to be quite strong relative to the last 12 months.
Well, quickly in our final seconds, is there something else in the pipeline, a movie that you know of that's coming in the future, maybe the next 6 or 12 months, that you're excited about from Pixar?
I think the upside for the stock from here should be the success of Finding Nemo. It should also be The Incredibles, which is coming out next November, and then Cars, which is coming out the following November.
Okay.
But also, they have a huge opportunity as they renegotiate the terms of their relationship with Disney.
Very well. Unfortunately, we're out of time. Sorry to cut you off, but Leigh Crawford with TCW Galileo Select Equities Fund, thanks for being on the program.